high definition.
From the Tri-State's first high-def station, this is Good Morning Tri-State.
It's tax season, and there are some things you should be thinking about as you prepare to file your taxes this year. Financial expert Bill Hesch is here with some tax tips this morning. Good morning. Welcome back.
Good morning, Janelle. It's glad to be here again.
Well, let's get right to it. First-time home buyer credit. There is kind of a trick in that one.
There is, because it is a credit that you claim on your tax return for 2008. It's $7,500. The catch is it's really only an interest-free loan because beginning in 2010, you have to pay it back at $500 a year over a 15-year period. But it is a way to stimulate first-time home buyers to go out and buy a home and give them some extra cash. The real nice thing about this credit, though, for 2008, you have until June 30th of this year, 2009, to purchase a home and claim the credit on your 2008 tax return.
Well, that really would help people out a lot there. What about the additional standard deduction for state and local real property taxes? What's up with that this year?
Well, this is something new, and it applies to someone that has basically their house is paid off and they don't itemize their deductions. However, if you own a house and have real estate taxes that you pay, if you're single, you can claim $500 tax deduction, additional deduction. If you're married, it's $1,000.
Wow, okay, well that's not bad at all.
Not bad at all.
College tuition deduction, what's up with that one? That's a new one for me anyway to hear about.
Well, they reinstated it. It had been around. It's a $4,000 deduction you have for tuition and related fees. You can't double dip with the lifetime learning credit and the HOPE tax credit that is available for college tuition, but you can take, you got to look at your tax return to see which one is better for you to take. That has been restored for 2008 and extended through 2009.
And I think some parents are going to be happy about this. The kiddie tax age, the increase of that.
This is the first year that it got extended to apply. It used to be we didn't have a problem when they went away to college. You could have investments that you had had over the years and sell them and pay very little tax. Well, now if you're a college student and your capital gains from the sale of stock or interest and dividend income is over $1,800, then you're required to pay tax at your parents' tax bracket.
Oh, I see.
So
that's a lot.
The catch here. So you got to be careful. And 2008 was the first year that the kiddie tax rules were changed to apply to college students.
And we have, for people who bike, some new rules for 2009 as well.
A little bit. The employers can now provide a tax-free fringe benefit, $20 a month, to purchase a bike, maintain your bike, and store your bike.
$20 a month is not bad.
Want to commute to work.
Right.
So those in Mount Adams can just roll down the hill.
That doesn't sound like a bad plan at all either.
Right, exactly.
Well, every year we talk about IRA planning.
Yes.
What's going on with that this time around?
Well, it's still there. You have until April 15th. If you're a business owner, you can do a simplified employee pension plan, which is an IRA for the business owner. So you have until April 15th to fund your IRA contribution and take that deduction on your 2008 tax return. The maximum deduction is $5,000. However, if you're 50 or older in 2008, you can claim $6,000 on the IRA. The other thing to keep in mind that if you have your spouse that works and you work and your spouse may not be covered by a retirement plan, you still may be able to take an IRA for your spouse or even your non-working spouse that's not covered by a retirement plan at work.
Okay, so we've got a lot of issues out there for people as well. And we're out of time, Bill, unfortunately. Yes. But, of course, William Hesch, you're over in Oakley. People can check you out for more information. Thank you so much, Bill. We appreciate it.